Hello and welcome to the weekly rant video. Quite a few things to catch you up on then over the past 5 trading sessions. It's been a very bad week for stocks and a good week for bonds, not just in the US but across the globe, as geopolitical risk has been well and truly put back on the table. The latest leg higher in risk premium was provided by the US President Barack Obama, who late on Thursday authorized officially the use of airstrikes in northern Iraq. Now, Obama did outline that airstrikes will only be used if US lives are in danger, as the primary use will be for humanitarian aid. Nonetheless, Obama did clarify that there will be no troops on the ground and the US will not get dragged into another war in the country. Nonetheless, this news flow did push the E-mini S&P to erase much of the previous month's gains, now falling back below 1900 for the first time since early 2014. This did also push the US 10-year yield to levels not seen since June 2013. It's also allied with German yields falling to record lows and continuing to approach the 1.0% to the downside as Bund futures continue to grind higher alongside weakness in European equities, which is primarily being provided by the ongoing concerns in Eastern Europe as further sanctions are installed against Russia, who are countering these sanctions with import bans of their own against agricultural produce across the EU. Elsewhere this week, data really has not favoured well. Italy have officially re-entered recession after 2 quarters of negative growth in the country, providing a further headache for Matteo Renzi and his government as his reform packages are still yet to show growth in southern Europe. Elsewhere this week, of course, we had the ECB rate decision, which was not the most eventful of the past couple of months. Draghi reiterated that June's easing measures are continuing to work their way through towards the real economy. He did highlight that the ECB are intensifying their preparatory work on asset-backed securities purchases, but did say that further regulatory reform is needed to create a simple and transparent ABS market. So as such, putting the ball back in the government's court to highlight these regulatory hurdles that need to be defeated before ABS purchases can continue. One interesting point of note within the ECB press conference was that Draghi highlighted that euro short positions were increasing, which he cited as evidence that the ECB's monetary policy easing measures are due to filter through towards the real economy. This is as euro-dollar did print the lowest level since November of last year, just in the last 5 weeks of trade. Looking ahead to next week, much of the focus will be on the Bank of England's quarterly inflation report, which is expected to shed some further light on just when the UK can expect the first rate hike out of the Bank of England. Of course, we'll bring you all those releases as soon as they hit the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic weekend.